Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for March 7th, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that spider exchange rate fund symbol SPY. We've been looking for a market top to develop up along these zones, even as high as the 137 level on the upside. In the bigger picture, we think that some good, healthy 5 to 10% market correction should occur, but that doesn't necessarily mean it's going to be a straight line move lower. In many cases, a topping formation could take even a month or more to develop. And so we could find ourselves in April and we still haven't really begun a big drop or downwards towards the downside targets. At this stage, if we cannot break back to new highs on the S&P, we'd be looking for this pattern to break down and head down for a solid test of the 127 to 128 area on the downside. But at this stage, we still cannot rule out the possibility that we first actually break to a higher high, testing into that 136, 137 zone before breaking back down to retest what would be a neckline along that 130 level. In the bigger picture, even if the S&P does break to a higher high, we don't believe that it will sustain itself beyond maybe a week on the upside before returning back down lower. So really at this stage, it's just a matter of watching how a topping formation is developing. Could the S&P be making new highs in a sustained rally? We certainly don't want to rule that out for later in the year, but at some juncture here, we first need to have a good multi-week, multi-month profit-taking cycle on the downside, create a solid basing on the S&P from which a new rally could begin, and we could revisit all the different scenarios at that time. But at this stage, we're just watching how the S&P develops a top up along these zones and then subsequent market correction. Next here, I want to take a look at the ISE US Regional Banks Index, which is symbol JLO, and the regional banks have been relatively weak compared to a lot of the other sectors within the markets. We continue to see deterioration right down to about a neckline point around this 24.50, 25 area where we have a focal point. It wouldn't surprise me for us to get a little bit of a bounce at some point here, maybe even back up to towards the 26 level on this index. But in the bigger picture, unless there was a very robust new rally in the markets, it's unlikely that the regional banks will have any intermediate strength. Next year, I want to take a look at the ISE Index, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And we have this index continuing to consolidate at lower levels. It approached down toward our 125, 127 support line down below. Really at this stage, any sideways consolidation here could have further negative deterioration. Really, I think that that 135 to 137 will mark an intermediate high. One thing we cannot rule out is that if the whole market still has to go to a little bit of a higher level before topping out, that this index may go for a double top retest up to the 135, 137. So we don't want to be overly bearish just yet on this index. We simply believe that the upside targets have all been met. So we should again see some sort of topping formations continue to develop on this index. I would be a seller into strength on this index. Next year, I want to take a look at that ISE Home Builders Index, which is symbol RUF, and we continue to see deterioration as well in the home builders. We're at a critical line along this 950, 970 because technically, like a lot of the other indices, if we have any bullish reversals off of this support line, we can't rule out the possibility of it retracing not only back up to towards a 10 and a 20 area on the upside, but potentially we can't even rule out a double top retest of the $11 area area on the upside. But if we have any price action deterioration below the support line in this 950, 970, that would mark a lot of bearishness in here, which would have us retesting lows all the way down in the 8 to 850 area on the downside. Now, I don't think that that breakdown will occur right off the bat here, but certainly any failed rally attempts would be bearish for this index. Next here, I want to take a look at that ISE natural gas index, which is symbol FUM. We had all of our measured move targets at this 133, 135 level on the upside. We temporarily exceeded it on the upside, and even though a little bit 1 day of selling kind of reversed it down, we continue to have a very clean uptrending natural gas index, because a lot of the components within the natural gas index are also oil plays as well. We continue to see the strength in this whole sector of oil and gas. We cannot rule out extended moves higher if we continue to see the commodities rising. If we have another leg higher in what we call an extended move, we could be targeting an area around this 140 to 143 area on the upside. If we do target that and see a push, I would be very careful on trading this as these extended moves. When you get caught on the wrong side of the profit-taking cycle that will eventually occur, they could be very fast and dramatic. So make sure that anyone trading these natural gas plays, that you're very eager to take your profits and have one foot out the exit door. Finally, I want to take a look at this ISE Mini FTSE 100 index, which is a symbol UKX. We've had a number of measured moves on the upside that even targeted 630, 640, but we've been talking about over the last week or two the fact that we've been in a sideways channel, more or less contained between 590 and 610 as the FTSE trades back and forth within those ranges. At this stage, if the S&P 500 for whatever reason was to still break to a higher high, we can't rule out that the global indices will all follow suit and actually show some short-term strength. But in the bigger picture, we believe the FTSE, just like the S&P, is going through a topping formation up along here that will eventually have the index roll over. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.